So we are live. Welcome to another Sunday Night Futures Live. This is where we get ready for the new trading week. We do a pulse check of the market. We'll talk about events that unfolded over the weekend, if any. We'll talk about the economic data that was released last week, and we'll talk about the economic data coming out this week and how it might impact the market. Before we do that, though, we're going to check out the pre-market activity. And we'll say hello to people as the room gets filled up. Hope everybody had an awesome weekend. And let's talk about first getting a sip. Okay, let's do this. Let's say hello to people. Trader Isaac, good evening to you, my friend. Trisha, the lovely Trisha's here. Great to have you. Seymour Rivers, sound check, very good. Thank you, sir. Very proactive. I appreciate that. Larry, 8 days ahead of Hot Dog King Joey Chestnut. That is okay. You got me. All right. Tom Lou, hey buddy, good to see you. Buster Stacks, welcome. All right, let's begin. So we'll begin with the S&P 500. Let's drill down to a 30-minute chart. We're, for the most part, flat. We do have a new weekly higher high. I think that's worth noting. We have pulled back off of that high. We do have resistance up here at 39.51 on the S&P 500. Watch that. That's probably going to be a battleground this week. RSI, a bit extended. We're putting in a lower high here. But again, this is a 30-minute chart, volatile. So we don't put all that much stock into it unless, of course, you're day trading. Let's move on to the Nasdaq 100. The Nasdaq 100, we are down fractionally. We did put in a new weekly higher high before a reversal. Watch out again for the 30-minute RSI. Let's see if we roll over here. And let's just throw up an alert. I want to get notified if we're able to put in higher highs while we're live. Okay. Moving on, let's go to the Russell 2000. Again, higher highs week over week. So we've already crossed that Rubicon. Moving on to the dollar. Now, the dollar's flat with a bias to the downside relative to where we closed on Friday's regular hours trade. Let's look at how we closed out on the week last week. The dollar is so critical to our longer-term portfolio. We are levered to the gold stocks, levered to the silver stocks. We own the physical gold. So the dollar weak last week, say that 3 times, and it is way too early to say we've topped out here. So the dollar is still a threat to our portfolio. Nasdaq 100 trying to fight back here a bit to flat. Let's go back to the big chart. Take a look at agriculture. Again, big chart, agriculture. There we go. All right, so this is important, right? We have agriculture prices, they're coming in. We spoke about this last week, way before the market got a sniff of it. I was saying they're going to shift the narrative. You're seeing energy prices come in. You're seeing agriculture prices come in. The CPI, which is what we spoke about last month, came in at the core lower low. The only reason why the market sold off on that CPI report was because the year-over-year number was huge, and the headline number versus the prior high, well, it was higher. But at the core, we declined. That's ex food and energy, month over month. So now the market is beginning to price in recession, a Federal Reserve that's not as aggressive. We'll see how long that lasts. Soybeans, they broke down last week. I mean, agriculture is under a lot of pressure. A lot of pressure. Wheat, I mean, is in crash mode. We are at lows not seen since February. You know, we're still up year over year. So by no stretch of the imagination, just simply because wheat prices, corn prices, soybean prices are coming in somewhat, doesn't mean that inflation has gone away. It just means that it's rising at a slower pace. But inflation is here. It's going to stay because the Federal Reserve, what they're going to do is they're going to try to fight this battle. What they're going to do is they're going to try to thread the needle, right? They've already screwed up, right? So they're going to try to not screw up again. So what they're going to try to do is get really, really cute. Fight inflation without fighting inflation. How do they do that? Demand destruction. That's what you're looking at right here, right now. More people popping in. Tom, I'm holding off on gold for a reason. The Biden administration, I think this is the first time that I agree with them on anything. The only reason why I agree with them is because it benefits me, I believe. And that is it's up 930. Nice. You spoiled it. You spoiled it. I was waiting to look at it. You son of a bee. Kat. Oh, thank you, Kat. Thank you very much. Yeah, what Kat's referencing is my buddy Bear passed away yesterday. He was at home with his family, and it's thank you very much. Quite the word bereft comes to mind. Thank you, Kat. Billionaire, MAGA, aces to that. Danny, hello, sir. Welcome. All right, so Tom Liu, he didn't mention a spoiler alert, but let's go to gold because the Biden administration has done the incredible. He did something I approve of, and that is why can't I find it? Is boycotting Russian gold. We'll talk about that in a moment. But obviously, the outcome is going to benefit us. So we're quite happy with his utter incompetence paying off for us handsomely. So we're overbought right now. We're up just over a third of a percentage point. We'll see whether or not we get follow through here, or does this really matter? And we'll talk about whether or not this does matter in a moment. Let's see if we're getting follow through on silver. Yep. We're getting it up 0.4%. Let's check in with oil. Oil, light sweet crude. Where is it? Light sweet coming in again. Demand destruction. The Federal Reserve right now, they're giddy as school kids right now with oil and food prices coming in. They consider themselves masters of the universe. They're fighting inflation without fighting inflation. This will not end well. Copper prices coming off their lows. Copper's looking good. How did they close out last week? Not so good. But it looks like we're going to rally here on copper. last commodity I want to go over is NG, nat gas. I just saw it. All right, so natural gas coming in. We're down. Wow. We're down over 1.5%. So new weekly lower low on natural gas. It was liking that $6 level. Where are we now? Still liking it. This may be a bear trap. Be careful. This could be a bear trap. That $6 per share mark looks pretty good. What else do we want to talk about here? Let's go to the VIX. The VIX is down, but I went over on the week ahead commentary with members. I spoke about the VIX, and while on a daily time frame, the VIX is it had a horrible week last week, very, very weak. But on a weekly chart, I'll show you what I'm talking about. On a weekly chart, the VIX is looking very good. All right, so we'll go to the daily chart first. And this is why everybody's got to be careful here. On a daily time frame, no doubt about it, this is bearish price action. Do we have support down here? We do have support down here. So this is a fairly good support level. We landed on Friday. And what I worry about, while everybody's getting all bullish, and I agree that equities are probably going to move up higher, you got to take a look at the weekly chart, because despite the fact that it was a down week last week, to me, it's rather bullish. And I'll tell you why. A beautiful cup forming, and we're forming the right side of that cup. B, we broke out the week before last. Last week, we pulled back to do a retest of the breakout point. We held it. We didn't really bounce. We bounced slightly, but no big bounce. So could we come down, retest yet again this week? Sure we can. Sure we can. But as long as we continue to probe this lower band of support, which used to be resistance, and we hold it, that's a gun to the head of the market. And you can't forget about it. You got to remember, it's out there. There are people buying volatility. Last Thursday, you had yet again the S&P 500 up, and the VIX was up as well. That usually doesn't happen. When it does happen, what it means is that while there may be some institutional buying, they're also buying protection, because they're not overly convinced that this sell-off is over. They want to be hedged. Thank you, Seymour. Appreciate it very much. You may, as I say, bearish. His name was Bear. As I say, bearish tonight. You may see me choke up a little bit. MAGA is endless, and the quantum system is in place. Gold should be up regardless of OC. Okay. I think crypto may have bottomed. It could have. It's a risk asset. If equities go up, it could bring up Bitcoin. Last I looked yesterday, it was up. It's down now. But what matters is that what we did here on a daily time frame is we broke out on the 24th, retested on the 25th. We're again retesting yet again. You don't want too many retests, but it's looking okay right now. But to really determine whether or not we bottomed out, we don't want to go with the daily chart. We want to go with the monthly chart, because everything else is just a short-term rally until you get a flash that you have a buy signal on a monthly chart. And right now, we're still in a downtrend. It's clear, defined. We can update this. Here's our, excuse me, here's our upper band of resistance. Here's our lower band of support. The trend is clear and defined. So might we get a rally? Sure, absolutely. Is the selling over and done with? I tend to doubt it. Where might we be going? I think that we may be going all the way back up to on Bitcoin 27.5, and we'll see whether or not that is a retest of the breakdown point. And if it can get through there, does it have the rocket fuel to close above 27.5, or does it fail? Does it roll over and break to new lower lows and test the lower band of support yet again? We'll see. But right now, as a trade, it appears to be setting up fairly well. Tom, I added SARK last Friday in case they changed their minds. Okay. Long LEBU at nice, good for you. We're doing well with that as well. I'm wondering about LEBU as a hold. These 3 times always have decay unless. Oh yeah, no doubt. If you're buying LEBU, you can't be in it for an investment, unless of course what you're doing is you're using a strategy where you're selling covered calls that more than offsets your time decay. So I agree that as a standalone product, that you don't want to hold it for the long term. It's a very volatile instrument. If you're going to hold it for the long term, be strategic. Sell a deep out of the money call option so you offset that time decay. Cat, does it need to close above 21.7 on a monthly? I think 27.5 is the number that we really need to get to, because that's where we broke down from. All eyes are going to be on that level. And really, I'm being kind. Right? 27.5 is right here at the lower band of the trading range, which lasted from December of 20 through to this month. So there's a lot of overhead supply up there. So 27.5 is going to be really, really critical. That's the number I would use to say, okay, we're back above that level. Now I can sleep well and hold Bitcoin long. And I'm dollar cost averaging in myself. I didn't go adding more aggressively at these lower prices. I'm just dollar cost averaging in until such time as the trend changes clearly. Paul, hello. 389 SPY retest Monday and go time market drives north mini rally. Yeah, we're probably going to get a rally. I think that the stars are in alignment for that. Lots of action in Kirk. Thank you very much. Yeah, the only reason why I didn't get involved with Kirk is that we did call Kirk as a short squeeze candidate, and it is getting squeezed right now. It never came down to our price point. And when we trade extreme oversold stocks, one thing that I'm adamant about is that we wait for our entry point. The stock has to come to us, and usually it does. In the case of Kirk, it didn't. We didn't chase it. That's the discipline. So unfortunately, I didn't get involved with that trade. I would have liked to, but it wasn't to be. It just didn't come to our price point. Yeah, look at that. We were talking about it down here in the threes. Nice move. Okay. Well, there'll be another trade. I was reading that Bitcoin has a low float. With crypto, I'm not exactly sure, to be honest with you. I would go to you may want to go to like a Reddit forum and ask that question, Kat. I'm not the best resource when it comes down to Bitcoin. Yeah, and the only reason why I've selected Bitcoin right now is because it's best of breed. I also like XRP, and the reason is the big banks seem to like XRP, and you can't even buy it here in the States right now. So if they're not letting you buy it, that's probably the one you want to be in. Okay. Um, let's talk about economic data because it's important. It's the reason why the market is rallying. I mentioned, I think it was Thursday night, that weak economic data is welcomed by Wall Street because bad news is good news, as sick and perverse as it is to them, because we don't live in a free market anymore. We need to get past that and understand what drives this market is credit. And if the Federal Reserve is loose with the credit, stocks go up. If they're tight with the credit, stocks go down. And we know from last Thursday's review of the Fed's balance sheet that they were supposed to run off the balance sheet beginning June the 1st. It has only risen on the month. They are not serious, and the street is getting it now. And that's okay. As long as we're going through these charts and going through this data with our eyes wide open and not buying the narrative out of the Federal Reserve of what they're going to do, we watch what they do. What are they doing? And what they aren't doing is truly fighting inflation. So that is bullish for equities in the short term anyway, until the markets put the brakes on the Federal Reserve. So, taking a look at economic data last week, it wasn't good. There wasn't a lot of it. Initial jobless claims continue to rise. What do? We rallied. S&P Global U.S. Manufacturing PMI missed. A number below 50 is a sign of contraction. What did the markets do? Rallied. S&P 500, S&P Global, I keep saying 500. S&P Global U.S. Services PMI, very close to neutral, very close to negative. Yet equities rallied. Yet Fed Chair Powell on Capitol Hill, we'll talk about that in a moment, what happened there. Friday, consumer sentiment survey. Here, I have it. I should have had this ready. I'm very sorry. Here we go. 50-year view. Look at you are here. 50-year view. We are at all-time record lows on the University of Michigan sentiment survey. What did the markets do? They rallied because the markets are believing that we are going into recession and that this recession is going to force the hand of the Federal Reserve to not be as aggressive as if they've been aggressive. They've raised interest rates 1% over the past year. Inflation year over year using CPI, the current adjustment, it's about 9%. The real number is in the mid-teens if you use the way they used to measure it back in the 1970s and 1980s. So they haven't even stepped up to the plate yet to fight inflation, yet the markets are factoring in now the Federal Reserve is done with their fighting of inflation. It's insanity. Sorry, folks. Hopefully we are still live. Could somebody throw a chat in there letting me know if I'm live or not? I don't know what the heck just happened. Everything just went down. Welcome to Kathy Hochul's New York. Okay. Thank you, Trader Isaac. All right. So you missed sentiment survey. Horrible. You go back to the economic data. The market had expected 50 spot 2, actual 50. What can you say? So equity markets rallied. Now, tomorrow we're going to get durable goods orders. Huge, huge number. I expect a miss. Why? Prices have gone up. The Federal Reserve wanted demand destruction. They probably got it. But a miss on durable goods probably means that we're going into recession or are in recession. And they're not expecting a big number here. They're just expecting just above break even. We are also getting consumer confidence on Tuesday. Big, big number. We're going to get Q1 GDP, the revision. Thursday, the PCE inflation data report. That's the Federal Reserve's favorite inflation metric. We're going to get real disposable income. That should be good for the discretionary names. Initial jobless claims, yet again, which have been trending up higher. Chicago PMI, a lot of economic data coming out this week, folks. Not much in terms of earnings. We'll go to that in a moment. ISM manufacturing index, construction spending, that's probably going to miss. So big week, buckle up, lots of economic data. If it's bad, expect stocks to go up higher, unless it's really, really, really bad. Tom Liu, Fed is really effed up. This kid said they should use our tier 1 underground gold and silver and copper. Yeah, they can't do that. They can't do that ever. Ever. They should. All right. Valuations. Last week was the first week we were down below 20. Excuse me. Down below 30 with a 29 handle. We're back above 30, making us still expensive. But the Buffett indicator has us at fairly valued. And this is a bit of a misleading statement. Fairly valued would imply that you're going to get value investors in there buying stocks. They're not. They wait for oversold conditions, deep, deep value. We don't have that. In terms of earnings, not much. We have Nike coming out tomorrow. And the reason why we focus on earnings because we sometimes trade earnings using option strategies. So Nike is one that we may trade. Most of these companies have never even heard of, so therefore we do not trade. Bed Bath Beyond, I doubt those options are liquid. We'll check them out though. Micron, those options are not that liquid either. So I don't know whether or not we're going to be doing a lot of options trading this week. Walgreens Boot Alliances usually have fat premium. So we'll see how liquid those options are. We get a gold mining stock coming out this week. So members, stay tuned for some earnings trades. And speaking of earnings, let's talk about guidance moving forward. And you can see that we need to be very, very careful with trading earnings this coming quarter because forward-looking guidance, you have below, here's the metric. In red, you have negative EPS pre-announcement. Infotech, huge number. Second in line, along with industrials, is consumer discretionary, so on and so forth. Not many with positive pre-announcements other than some in the infotech space. So we need to be really, really careful with trading earnings as we move into this new quarter because stocks are still expensive. And if they miss on revised downward earnings guidance, that means more of a bloodbath to come. So we want to be very, very careful. So we continue to have, I mean, they're either children or really nefarious people that are running the G7. I have to think that they are nefarious. And the G7, you'll be happy to hear the G7, yet again, the band of merry misfits, they have committed to indefinite military and financial support to the Ukraine. So somebody's getting paid and they are virtue signaling with your money, our money. And this war is lost. It should have never happened to begin with. It was avoidable. My prayers go out to the Ukrainian people. This didn't have to happen. And they are not going to let this go. They want to keep this war going. Somebody's getting paid big, big money to keep it going, no matter how many innocent lives are put at risk. So what we have out of the G7 as well is Biden. G7 will ban Russian gold imports. Outstanding. Bravo. Thank you. Thank you, G7. Thank you, President Biden. Because what you've done is you've just made gold more expensive, and that is just simply outstanding for my portfolio. Awesome. So when you take a look at China and Russia's treasury holdings, they've been declining for years. However, their gold reserves have been ripping through the ceiling. So tomorrow when the Russians wake up and they review the value of their gold holdings, they're going to probably send a box of chocolates over to President Biden because they are much, much more richer today than they were prior to this moronic decision out of the potato in chief that we have. So here's a couple of blurbs I highlighted. As for Russia, its central bank has been an aggressive buyer of gold, not a seller. You would think the G7 would know this. And if anything, Biden's decision will only make the gold market the latest to follow the example of oil and I don't know what, bifurcate. Cheaper for Russian friends and much more expensive for Russian enemies. In this case, it's good for us. And you'll remember the Russian ruble, or they called it ruble, Russian ruble, which Biden gladly mocked back in February as rubble, has since risen to a 7-year high. So this is the euro versus the ruble. I have a better chart. This is not a good chart. The ruble is at multi-year highs right now. This is not reflecting that. That's showing the euro relative to the ruble. The current account deficit, the United States is dropping like a rock. We are indebted, whereas Russia, they're doing just fine. They're doing just fine. They don't need us. And all we keep doing is chopping off our nose to spite our face. And did you know that Russia is the second largest gold mining country in the world? Even if it is allowed to transact freely with the rest of the world, which accounts for roughly 80% of the population, this is how full of ourselves we are. We will likely simply boost sales to China and the Middle East, whom they will be happy with continually purchasing Russian gold. We'll find out in a few hours. Yeah, let's go back to the chart of gold. It is off the highs, but we are clearly higher on the session, and we are setting up nicely on this 4-hour chart. We just broke out. We have broken out on a 4-hour time frame. So gold looking like we're going to get a lot more upside here, and we really need it because the month has not been a good month. Relative to equities, though, on the year, far better than equities. Moving on. The Fed blinked. Yes, they did. So really, this just speaks to what happened on Capitol Hill the other day when Fed Chair Powell was there. Recession risk would balance inflation fighting. Sure, inflation is still outweighing the risk of pushing us into recession, but there was a semblance of balance. This is what the game has been, demand destruction. Powell wouldn't fully contain his inner dove. Whatever message he was trying to convey, there was just enough hints of dovery in his answers to give the markets comfort. So that's why you saw the rally. He gave the green light to the market that it's all good and you should buy equities. And that's really all I have here. Let's do some chart requests. I need to finish off exactly at 7 o'clock tonight. I have a date with a pint of Cherry Garcia to wash away my woes. So if you folks want some symbols, you want to throw them in there, I will wait. But first, I will go over comments, and I need to go into the members area, which I have not done. Bad contrarian trader to find out if there is any requests in there. I will keep talking so there's no silence while I do this, so it does not get awkward. I would sing, but you would definitely log off. No requests. Okay. All right, let's kick it off. Let's do Rad is out there. That's Rite Aid. Let's do it. Let's go to comments first. Kat, no, I haven't watched it yet. I saw snippets of it. I will be watching it though. I've been waiting for them to drop the next bomb. I'm positive there's going to be a next bomb coming out of names and more data and video of people pulling up and dropping off those ballots. More of that. I guess Hunter didn't get 10% for the big guy, yeah, in the Russian gold, but still getting it from the CCP, no doubt. Better a potato than a trader. Okay, I think he is a trader, right? In my own opinion. All right, RAD we got. X and CLF. XCLF. Okay. And McNeil. Apple. RRC. Let's do it. RAD. Folks, we're going to be using TrendSpider Automated Technical Analysis. 35% discount code in the description area. Take advantage of it. Woo! Bam! We'll come back to the daily chart. Very nice chart. Let's go to the monthly chart. Good volume on the month so far. We have a breakout, I believe. Yes, we have a breakout, assuming that we close there. Weekly chart. Nice move up higher last week. Again, on volume, rising sequentially. Daily view. Overbought. Can't buy. Got to wait for the pullback. It will come. Have patience. Where might there be support below? $7.50 per share. I'm liking that price point. RAD. Do not buy it right now. Wait for $7.50. Where do we close? $8.69. Not a bad pullback. X. I haven't looked at this one in a while. That's not X. Weekly chart. Okay, so we have done a retest. It came close to it. We may have a higher low getting put in here on X. But what we need, I think this could be bought. This could be bought. Begin nibbling, add more on a breakout above resistance. I don't want any sensitivity. We want to close above that resistance level. We'll keep this one active. This is a good trading stock. Now, what I would also do here is create an alert. We'll keep some sensitivity on touch, bounce. And we're good to go. Weekly chart looking good. Daily chart, nice breakout. I mean, this is the value of the automated trend lines. We broke out. I did not draw these lines. I'm going to take them off, put them back on. So we had broken down on the 21st. We have now recaptured it. X could be bought. We like E. Goldman Sachs July monthly calls. You're buying the calls, you're selling the calls. Rick Roofing. All right. So while I wait for the reply from Rick Roofing, we'll talk about the analysis here of the chart. Then we'll talk about the options trade. Goldman weekly chart, very, very nice week last week. I think that this is an interesting setup. I don't like the fact that volume dropped off. That's signaling a bit of trepidation. Not a lot of conviction out there. Let's get rid of all these older drawings. All right, good. Start fresh. All right, so using the automated trend lines, and I'm glad I just clicked this because what happened, and I think this is why you saw volume drop off last week, was that you have resistance immediately above, right? So we closed at 302.75. We have resistance at 304.40. So keep that in mind that you have resistance above. Now, if they gap it up and we close above that mark on Monday, Tuesday, all right, good. The only thing to keep in mind, because Rick got back to me with his answer about these option trades. So you're long the July options. So you have time decay. You need this. You need this to work pretty quickly. So I would really be looking for some quick price action next week. What you may want to consider is that, especially if you have a profit on this trade already, let's do a hypothetical. If you want to throw your strike in there, that's fine. And that'll help me out a little bit. But you have the implied volatility historical is at about 49%. Once you hit 50, that's considered an expensive option. You're right there. So what you may want to do is consider selling a deeper out of the money call option above your current strike price. That way it helps finance your trade. It provides you a bit of a hedge and it allows you, especially with an option that is within that zone where time decay is picking up, you're able to offset some of that time decay, allowing yourself a little bit more time to make the trade go right for you. Now, The only downside to it is that if you get Goldman Sachs that goes ripping through the ceiling, you may cap your upside potential. I think that's a secondary worry, though. So just a word of warning and hopefully a bit of helpful advice on the trade with resistance immediately above. Watch. You want to see a close above 305 pretty quickly. Daily chart. Again, resistance immediately above. Volume was very good on Friday. That's good to see. Let's overlay the weekly trend lines on top. So it looks as though this upper band of resistance is coinciding with the weekly resistance where we already have our alert set. So Goldman's looking good here. And if those options continue to get more and more expensive, I'm probably going to sell the options. I like trading Goldman Sachs. So good luck with the trade. Cliff. Cleveland Cliffs. We'll begin here with a monthly chart. And the monthly chart is looking horrible. Now, while it's looking horrible, we did bounce off of support at 1575. If we break 1575, you got to avoid the stock unless you're shorting it. So it's not looking good here. Weekly chart. Again, we bounced off of support. Daily view. Not a bad day on Friday. It was a good day. It looks as though this is serious support at 1575. If you wanted to enter this to the long side, I'd be okay with it. You just want to use a stop right below that 1575 mark and get out pretty quickly. This is not a stock that's in favor right now, so just be very, very careful. Apple. Apple's looking good. We'll come back to the daily chart. Let's go to the weekly chart. Now, what we did here, and this is very similar to the Goldman Sachs chart, in that we had resistance immediately above. What do we do by the end of business on Friday? We closed above resistance. Now, what you want to see this coming week is a retest of that support level. Because if we close the week back down and below it, you want to avoid this stock like the plague. If we do get a continuation rally, you're going to have resistance up at 145 and change. Daily chart. Again, another breakout daily time frame. Looking good here. You just want to get a retest of the breakout point and then a continuation move up higher. So the way I would trade it is this. If I owned it already and I wanted to buy more, I'd wait for the retest, maybe nibble there, but definitely buy more on the continuation move higher above last week's higher high. Apple looking good. RRC. Range Resources. Daily chart looked good, but we'll come back to that. Weekly chart's looking good. Let's go to the monthly chart, get a better feel. Monthly chart, a little bit meh, but we're 2606 is the number to watch. Where do we close on Friday? 26.29. We got to hold 26 bucks a share. We rallied well off the lows of the session last week, still closed down, but all down weeks are not made equal. This is a bullish chart, despite the fact that we were down on the week. This is implying that you had a lot of buyers that were buying the dip last week. Now, what I'd be looking for this coming week is a breakout. Now we don't want any sensitivity. Let's get that off. Good. Because all we care about is the close above that resistance level. I don't care if it trades there at 10 a.m., noon. I care at the end of business, where are we trading? Did we close above resistance and hold it? Daily view. Really good chart here. I mean, Thursday was a bloodbath, but as you can see, we tested support, rallied off of it. Friday was an inside bar, but it looks as though we're going to get a continuation rally here. RRC looking good in the new trading week, but I would wait for that alert to fire off. Again, these names are not in favor, so let them come to you. Confused on blue. If sideways for a while, blue. Oh, this is the pharma stock. I know this company. It broke out on the month. It's broken out. Weekly chart. Now, you had a nasty reversal the week before last, but last week was an inside bar, looking good. We may get a retest of this breakout point. You know what? We've already had it, really. We've already had it. We broke out here, actually, the week of the 6th. Last week, the week before last was a retest week. I think we're setting up for potentially a continuation move higher here on blue. The only thing that's going to have technicians worried about the stock is the reversal week here. That just tells you you have a lot of sellers above up here. And you can see that it was support, then it became resistance, and then we sold off hard. Daily view. Daily chart, we broke out on Friday. I like the setup. I'm liking it. Would I be heavy? No. But I would certainly get long of this. We broke out. The only thing I will warn about, right, is this. I don't like breakouts when I see volume declining sequentially. That's a problem. So I wouldn't make this a big trade unless, of course, volume picks up and we begin to break out above other resistance levels. So it's looking good. I just wouldn't get overly aggressive with the trade. Paul, you're welcome. Anytime, pal. Thanks for being here. Trader Isaac. Any thoughts on Buffett still buying Oxy dips? I just go with the chart. I really don't pay attention to what he does. What matters is what the chart is doing. And his mind is out years. Mine is out weeks at best. I don't like this chart. We had broken out last month. This month, we had a failed breakout. I don't like the sector right now. So the monthly chart bearish. Now, the weekly chart, we had a doji star formation last week. That's a sign of indecision. You may get a rally, which may correct some of this horrible damage that's been done on the monthly chart by the end of the month. Volume dropped off on Friday. On the week. I don't know. The weekly chart looks pretty good. Let's go to the daily chart. See if we can get persuaded here. This is one I would just sell premium on. I would sell deep out of the money calls, deep out of the money puts, throw a strangle on, throw a straddle on. I would just collect premium on it. I don't see it going anywhere quickly. And in that type of an environment, you want to own, you want to sell premium. That's what I would do here. Oxy, The options are okay in terms of premium. They're about the 45% tile. Not expensive, but not overly cheap either. Otherwise, I wouldn't go buying here unless you're going to do it for an investment. Different story. Etsy, looking good. Etsy's nice. Daily chart anyway. Let's go to the weekly chart first. Nice. Etsy's a buy. Got to buy the stock. Doji star formation the week prior, indicating that we had a potential trend reversal. We got it. Volume was light, though. That's the only caveat I'll throw out there. Daily chart. We broke out on Friday. 3 sequential back-to-back up days in a stock that's in a downtrend. Don't expect that to last. Watch for a pullback, and that could be your entry point on Etsy at around $78.50 per share. And we're good to go. Let's check out seasonality on Etsy really quick. There's not a lot of data here. June is usually an up month. August and September seasonally favorable. So it's okay. I do like the chart though. 78.50, that's the price I'll be looking at to enter. Tesla. We have a trade on Tesla. We're trading strangles. We had them expire worthless last week. We opened up a new trade for this week. We broke out on the week. Tesla's going up higher. We will have resistance up here, though, at 792 daily chart. We broke out on a daily time frame. Again, what I want here is a retest of the breakout point, a little bit of sensitivity, a wee bit. There we go. And we're good to go here on Tesla. BA. Yeah, BA is looking rock solid. I like the setup here. You have a W formation, and we broke out last week. We broke out above the pivot point at 140 per share. Boeing going up. I am calling a bottom on Boeing. It's going up. I like it. Bob, I've been thinking of getting short with your puts. These are all Chinese stocks. I have a rule at McNeil. I do not trade Chinese stocks. You are not the boss in that trade. The Chinese government is, and the other reason is that if whatever happens, if whatever happened to China, if whatever happened to Russia happens to China, your trades are worthless, which would actually help you out because you short the puts. but I would not be long of Chinese stocks or involved with them in any form of fashion. It's less of a free market than we have. All right, folks. Everybody have an awesome trading week. Have a profitable trading week. And members, I'll talk to you in the pre-market session. Talk to you tomorrow. Have a great night.